Welcome back to the channel for part 2 of the common trading mistakes video. Be sure to like and subscribe and check the links in the description for the Market Mentors Discord and websites. This is where I teach these concepts and more every single day. You can see me giving my analysis for the NASDAQ and showing my positions and winners, along with doing Q&A and providing a lot of other resources and value. And I do this stuff every day in Market Mentor, so check this out, check the links in the description, and I'll see you guys in the video. But the next one will be revenge trading. You cannot the market's not going against you. The market does whatever the market does. You just do not want to revenge trade. You're not trying to prove a point when you're trading. You're just implementing a system and just trying to follow that system and let the odds play out in your favor. You cannot just say, okay, I'm going to get the market back. I'm going to just make my money back in this trade. You don't know which trade is going to win or lose, so you just want to go follow your system, and you don't want to try to just beat the market and think you're going to show it a lesson. You're not really trading to be right. You're trading to just be disciplined and follow your own system and let the odds play out in your favor. Another mistake is relying too much on others' analysis. If you do this, if you're in like a signals chat or something like that, even if you were to join Market Mentors, you shouldn't rely, let's not say too much on our analysis. You should try to have your own understanding with it as well. You should understand why we're saying, okay, we're looking to buy here or sell here. You should understand why you're doing something as opposed to just doing it blindly. Because you need to understand that, okay, with following this, it comes with a risk of doing this certain amount, or you need to understand why I'm saying, okay, I'm buying here because of this, and we're looking to do things like enter in or exit at or stop loss, take profit, because you can use others' analysis as a confluence for yours. Maybe I'm looking at a buy it into an area that you're looking for a sell to happen. So you need to understand, like, why someone's doing a certain analysis. If you're just following it blindly, but you're trying to take your own trades as well, then it could really start to clash with your profit and mess up your own gains, basically. So the next mistake I would say is trying to cherry pick trades. This really goes kind of back to the signals or even like market mentors. What if I call it I'm entering a trade? You cannot cherry pick trades, and this means that you can't just pick a trade and say, okay, this trade, it doesn't look very good. It doesn't look like it's going to be the cleanest trade or go through. You can't just say, okay, this one looks better. I'm going to go into this one and, like I said, risk a lot more on this one trade than I did the other ones, because you don't know which ones are going to go through. I might have the ugliest trade go through, and it might be the ugly trade and have the set that looks really nasty but valid, and it just might go through. But the cleanest one that's really clear just might lose. You just don't know. You got to take every single valid trade, especially if you're something like a signals community or a type of even Market Mentors. You need to take every single valid trade because we don't know which ones are going to go through. It's all probabilities. Another one I would recommend is trading outside of session times. It's easier to do this whenever you're a little more experienced, but if you're just starting and you really want to try to get profitable and understand how the market moves in different types of conditions and a lot of volatility and see those type of rapid moves, you want to trade during those session times. So during New York session, during London session, you can try Asian session, but London and New York are going to be your real primary big sessions that a lot of volatility and a lot of things have, like news events or big pushes, and all kinds of moves will happen in those two sessions. So you should probably want to just trade during those sessions. Don't try to trade like Asian or Sydney session if you're not really looking for that. If you want to have those bigger moves, go for those two sessions, and don't try to trade, of course, during when the market's just first opening up at from the weekend or from the trading day, and don't try to trade during those times. Just wait for the market to get in those volatile sessions so you can see cleaner moves and bigger moves for yourself. Another one is chasing past performances. So this could go back to an instance where you went over leveraged and you made a lot of money in one day. Let's say you made $1,000 in one day off of one trade, and because you over leveraged, but it happened to go through this time. Trying to do that and chase those past performances, like, okay, you went on a certain win streak and you just kind of over leveraged on it, you made a lot. That's not good for the long term, because you want to be able to trade long term so you're making a lot of money. You need to just think about how you can be consistent and apply each trade and take it one step at a time and one trade at a time. Because when you're trying to chase that money you had in the past or that trade you had in the past, that's how you often get caught up in not seeing what's happening right in front of you, basically. Because no trade is the same. Every trade is different. So you can't just try to chase those past trades or past money you made. You need to focus on capitalizing on the trade that's in front of you. You need to go to the next trade and take it as you took the previous trade, hopefully consistent with the same process and rules. So you shouldn't be chasing past performance. That's how you start blowing your account, over leveraging and risking too much and doing incorrect things and trying to have a little patience whatever you're trading. So it's important not to chase past performance and just focus on what's in front of you and what's happening currently. And of course, with that, chasing money, kind of to go off of that as well, you shouldn't get in the mindset of trying to chase money whenever you're first trading. You should think about trading in percentages, like, okay, I gained this much percent, I lost this much percent. You should think about trading in percentages, but you should just go into the mindset, okay, I really want to do trading because I want to be a better trader. If you're just chasing money, you're going to over leverage, start risking the wrong amount, start doing things improper. But there's a real approach to trading that you should do that I'm going to really get into a lot on Market Mentors. But there's a real approach you should do, and it shouldn't be just to chase money. You should really be trying to implement your system and be about trying to be a better trader. And the last one, this is kind of a little bit of a caveat, is not having a defined strategy that relies too much on indicators. I guess I probably typed that out wrong. But basically what I'm saying is it might not be the most beneficial thing to rely too much on indicators, because indicators are lagging. They don't show you what's happening in real time at that moment. They show you what's happening based on the previous candles instead of what's happening right there that very second. That's a little bit of a caveat. You can definitely still be profitable no matter if you're trading with the indicator or not. I personally do not, but you can still be very profitable trading with the indicator. It just kind of depends on you as a trader. But I'm just saying it's a little hard if you're starting out to just relying too much on indicators. You might want to try to couple that together with like price action and different things. So it can be very hard to just rely on that. So with that, let's see, we can review those. Should space this out, but yes, I would recommend a quick run through. Common mistake is not journaling. You need to always journal. Not defining your risk before a trade. You should know how much you're going to lose or make before you enter a trade. Not setting a stop loss. You need to always set a stop loss and not setting a take profit. You need to always set a take profit whenever you first enter those trades. Because if you forget to take it, price can be moved very fast at times, and you can mess with your account doing that. Closing a trade early. You should hold your trades to either hit stop loss or take profit unless you have specific rules that tell you otherwise. Entering a trade during high impact news. You should stay out of the market whenever news is dropping, especially things like NFP, the Fed speaking, job openings or job rates, anything like that is going on. Stay out of the market for at least 15, 30, 45 minutes. Don't over leverage your account on one trade because you don't know what trade is going to win or lose. So you just want to stay out and play the long game in trading, not try to just get rich quick on one trade. You do not want to overtrade. You want to limit yourself or get around your average in trading. You don't want to just keep taking a million trades in a day. You want to take those quality, valid setups. You do not want to trade too many assets when you're starting out. You want to try to trade one asset, master it, then you can start moving on to different things once you get a good feel for that and understand how to make a profitable system. Do not want to revenge trade. You're not trying to beat the market and teach it a lesson, or try to show the market that you're correct. You're trading to just be a better trader and try to implement your system and let the odds play in your favor. Relying too much on others' analysis. You need to have your own analysis and understand why others are doing what they're doing and why you think you have your analysis. So you need to understand how they can combine or why they'd be different and let them just play out and just learn from it. Do not cherry pick trades if you are looking at others' analysis, because you don't know which ones are going to win or lose, or even your own analysis. Don't just cherry pick a trade and think, okay, this doesn't look like an ideal setup, but it's still valid, I'm not going to take it. Take it if it's a valid setup and just let the results be what they're going to be and just learn from it. Do not trade outside of session time. So I would recommend highly just trading New York or London session if you can, because those are probably the more volatile sessions that are going to give you those cleaner moves and be better results and performance for you. Don't chase past performances or don't chase money. Trade to be a better trader. You want to be consistent and focus on what's going on right in front of you. You do not want to just try to chase money and chase one big trade you had in the past, because you're going to start over leveraging, making mistakes, being impatient, and then you're going to start having a lot of bad habits and your account's going to get blown eventually. And I would say, just caveat, you don't really have to do this because it just depends on you, but I would say just don't rely too much on indicators if you can, because indicators are lagging. They are not showing you what's happening in the exact second. They're showing you what's in the previous candles. So just small caveat. You can still be very profitable with going through or trading with indicators, but that's just my 2 cents for that one. So with that being said, I'll wrap the video up here. Be sure to like and subscribe. Check out the channel for more content. Check out the Market Mentors Discord and website, and I'll see you guys next video.